Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us at the market site in Times Square, New York City, we have Fausto Pugliese, president of Cyber Trading University. We're going to take a look at how you use Nasdaq BookViewer in down markets. And Fausto, really, that's what the question is. Can you trust any sort of bounces that we're getting here? Obviously not. We've seen the action just from yesterday until today. But there is something here that can actually show you the levels at where traders are trading.
Well, that's the big thing. More and more people are starting to realize with the imbalance in the market and seeing the big rally that we have after COVID, now things as swing traders, they're getting a little bit nervous, don't realize that they're starting to realize they have to start following where the money is. And they keep focusing on the past, but don't realize that it's the future really is going to tell you where the market is going, and the future is see where the orders on the Nasdaq BookViewer.
Right, and if we take a look at your first slide here, we can see how, you can see the support and resistance and how you're trying to find those iceberg orders, your largest orders.
And they're also known as big block orders, but yes, when there's a big majority of them, they're a big iceberg order. And when you look at the Nasdaq BookViewer, you'll see on the left, on the right, it's more or less just seeing there's so many orders out there on the bid, there's so many orders on the offer, but there's really 95% of them are really just simple basic orders, 100 shares, 500, but it's the big block ones that you look at, and it's those big block ones which make the big support and resistance levels. So you can't have a support level without those buyers, and you can't have big resistance level without those sellers, and that's how we're going to look at a couple of examples here on the BookViewer.
And let's go through a scenario using Apple.
Right, so when you look at Apple right here on the slide, you could see that there was some major support levels right there. And then what happens that you have, I zoomed in, you have a little bit of a big buyer right there, and I believe it's, there we go, this one right here. Is that it? Yeah. So you basically have a big buyers. You got two big orders right there. And you'll notice on that big order, actually it's square that we're looking at. Yeah. So you'll see that there's two big orders out there, and you see that on the chart you have some big support levels holding there pretty steadily. But once those orders get filled, then what happens, that triggers down. So the whole point is this. When you're watching a stock and you see a stock trending down and you're sitting there and it's hovering, you might have some indicators that are kicking in, then what's going to end up happening that it's going to eventually break it, and the way you see it, even on the candlesticks, you have those big red bars. Those are transactions taking place, and that's a sign that it's time to get out. And if you don't get out, you can see how the stock drops pretty quickly.
So let's go to the Apple example and take a look at specific levels.
So if you look at Apple right there, you could see that there was 364 orders. There are three columns on the Nasdaq BookViewer, and I have a couple of videos that show you exactly how to customize it, because you don't need to see all the orders. Those really the three columns are important. How many orders, how many shares, and at what price. And if you notice on that order, you'll have literally about, what is that, 364 orders, talking about that make up literally about, 50,000 shares right there. And that is on the offer side. And most times when you see that, that will cause a big resistance. But if you notice on the next slide, when that wasn't really just a resistance, it was below it, and that was preventing it from breaking it. And some people say that's maybe a double top, a triple bottom. In my sense, is like, listen, regardless of what you think as a support, as a double top, didn't break it, the seller didn't get executed, and what ends up happening, if the seller's not selling, Jill, he's just going to hit the bid and start executing the buyers on the bid, and that's why the stock went all the way down. If you see, dropped all the way down to 155.
Let's take another example with GGPI, and I'm going to be honest with you, Fausto, I've never heard of that ticker. I don't even know what the company does. And when you use this kind of platform, however, you might not, you should have a working knowledge of the fundamentals, but the price action here is really what you're focused on.
Well, Jill, at the end of the day, traders just care about making money. Being a day trader, we just like to trade stocks that have the most action, that have the most volatility in them. Sometimes these stocks don't move. But a stock like this one, GGPI, it's just more of an example of seeing a very quality iceberg order. And you could see right there that the stock literally had some major resistance levels, and it hit it, it came back up, back down, it hit it again. And what was it hitting? It wasn't a resistance level, it was a big seller. And that seller is 22,000. Now, it might not sound like a lot, Jill, but when you're looking down on the Nasdaq BookViewer, there are 500 shares, 300 shares, but you're talking someone that's about maybe 20, 50, 100 times more of the average volume. And listen, like I said, that seller doesn't get done. There's only one way he's going to get out, is executing the bid, and that's why the stock drops.
And our last example here, if we take a look at blue, now this stock went from 4 to 4.54, and 54 cents might not sound like a lot, but when you're trading a $4 stock, from a percentage perspective, that's a pretty sweet move.
If you buy 1,000 shares, okay, if you really think about it, 1,000 shares moves 50 cents, it's $500 a day, it's a $100,000 salary. Some people are happy with that. It's not a bad salary. And literally it did it in 30 minutes. But the big key here is that why did the stock go up? And you have some examples of showing how it kept going up. And it was hovering at one specific price around 425. But there was a 96,000 share buyer there, Jill. And the thing is this, why would a buyer go out there and expose themselves? People think like, is that a fake order? Listen, Nasdaq, you know, you can't put fake orders. You have to honor it. That's why what makes Nasdaq, Nasdaq. And you know what? He's out there, he's putting a limit order out there. He's not getting filled. So if he's not going to get filled, there's only one place to go. He's got to buy from the sellers out there on the offer. And that's how the stock got driven up. So as a trader, specifically a day trader, and by the way, this goes on for every stock that's out there. This is just a very clear example, seeing something very predominant of an order. But when you see that and you wonder, why is the stock going up? Who's running it up? It's because of that buyer, Jill. And that buyer, if he has an order, if it's an institution, if it's a brokerage firm, or just a trader, a big trader out there, and he needs to fill that order, there's only one way to go, and the stock's going to go up.
All right, Fausto, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.